I'm me and Anna's me, so it's all me this morning. If you have any questions, please just drop them in the chat box. Happy to answer them there. If they're short questions and longer questions, we will answer on air for you. I just wanted to pick up on to look at the daily CSI. As Anna said, and I put this in the chat box to Clifford as well, is days like yesterday, they are hugely profitable days. You have to be comfortable trading in them though, and it's not for everybody. The timescales we took on yesterday, very much on the faster timeframes, as you would expect. You're really in and out a lot during the day, but you're trading big size because the markets are moving. So the quid pro quo is this, I guess, putting in a nutshell. Yes, the market may be volatile, but with volatility comes momentum. With momentum comes bigger size, but probably for shorter periods. When you're trading in, I was going to say, more standard markets or more usual market price action, you're not going to see that momentum and volatility so much, and therefore it's an issue of, it's always an issue about size and the relationship of size to the time you're going to be in the market. When the market is more measured, more even paced, you're probably going to be in for longer periods, and in order to make that the equivalent sort of money, it's going to be much harder. You're going to have to scale up quite dramatically. But when the markets are very fast moving with momentum, you're in and out for a much shorter period of time. But if you're in and out with a bigger size, so you make that money in a much shorter space of time. But you do have to trade big, and that's not for everybody. I'm not suggesting it is. It certainly isn't. It's only when you've been doing this for the number of years we've been doing it, 20 odd years now. You get pretty comfortable with doing that. Obviously, you're managing your stops, you're managing your risk. The risk on the table is much bigger, but then so is the reward. It's as simple as that. And it's also an absolute reinforcement of volume, because without volume, I wouldn't say it's impossible, because price action shows you, it does reveal an element of what is going to happen next. But with volume, it gives you that confidence to reinforce your decision, particularly where you've got a market which is collapsing and then reversing. It is immensely difficult to change the mindset from one of, we've talked about it many times before, when a market is moving very strongly in one direction, and then we get what we call the souffle effect, the whole thing then collapses as quickly as it rose. And this is what we're seeing at the moment. It's very difficult to change your mindset from one direction and reverse it completely to the other. But that's part of trading, and volume helps massively in that decision-making process. Without it, I don't know how traders do it. That's what we've used for many, 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 many years. And it just gives you that confidence. It reveals the truth behind the price action. In the selling environment, it highlights when the buying is coming in. I just wanted to highlight the daily CSI for one particular reason, because we do focus a lot on the shorter time frames, partly from an educational standpoint, but also, as I said just now, in terms of trading intraday, these opportunities come and go, and you've got to be quick on your feet. That said, we're now looking at the daily chart. What it's telling us very loud and clear is that the Japanese yen is very much overbought. The Swiss franc alongside it is very much overbought. Why? Because their risk currencies have been bought strongly. It goes without saying. And up at the top there, you've also got the euro. Down at the other end of the spectrum, what have we got? We've got the commodity currencies all bunched together: the yen, the New Zealand dollar, the Canadian dollar, and the Australian dollar. So the blue is the Australian, the purple is the Canadian, and the New Zealand is the white. So if you're looking at this from a daily perspective, what are you looking at doing? Well, it's pretty straightforward. You're looking at buying commodities and selling the risk currencies. So it really puts it in perspective. You can approach this market in any which way you like. I've got the 15-second chart running on Ninja at the moment, or you can go up to the daily. It's what suits your approach. And if you're looking at this from a much longer term perspective, maybe you're not trading full time, and you prefer the slower time frames, then this is now setting up for a reversal in the sentiment and buying of commodity currencies, of selling of Swiss franc and selling of the Japanese yen, and it looks as though we've got selling the euro as well. Dollar's pretty much been hammered over the last few days as well. So that looks as though it's getting down into oversold and possibly a reversal on that as well longer term. I just highlight it just to really go to the other end of the spectrum and just point out that this indicator, yes, we use it intraday a lot, but when you look at the dailies, you want to take a more considered, you could go down to the weekly and the monthly if you wish, but the daily is a pretty good place to start. It gives you a heads up. And the same approach, I'm not going to drop on it now, Anna may do, in terms of the currency heat map, similar sort of scenario. You would look at that in the context of the ranking ladder alongside and what is happening in terms of the weighting that is going on intraday and how is that ranking ladder set up. And it would probably set it up pretty much in the same sort of vein as this, and you're looking at that at a much lower time frame. Let me pass back to Anna for a moment.